Canadian oil and gas stocks have the opportunity to be one of the best investments of the next decade. We have significant supply-demand imbalances. We have significant news coming in, and the opportunity is there to make not hundreds, but thousands of percent. Today, we have so many important elements we need to talk about, but it all starts with the IEA World Energy Outlook. If you didn't see, this came out just about a week ago, and it was significant. The most important thing is what we had hinted at back in September. These guys went from one of the most bearish organizations on the planet to bullish on oil long term. When I say that is a complete shift in not only their perspective, but the sentiment of the entire market, I am not kidding. If you pay attention to what funds and asset managers are saying, the energy has really moved over the last 6 months. And now, with one of the final moving blocks, one of the most important elements that was keeping sentiment mixed, shifting bullish, a lot of money has suddenly been unlocked to invest in long reserve life oil assets. Now, if I show you what the graph looks like that has caused all this shift, you will see it is significantly different from what they showed just last year. Now, instead of talking about peak oil in the not so distant future, we are talking about the demand for oil climbing through to 2050. That is a significant shift away from the idea that maybe it would decline in the next 5 or 10 or 15 years. And that also means that all of a sudden the calculus on the valuation of stocks which hold long reserve life assets, like, for example, Canada's oil sands, is completely changed. It makes way less sense to value these guys at a discount to shorter term shale players than it did 5 years ago, because all of a sudden that long term story is incredibly important. Do you want to know the best part? The part that this graph doesn't even start to show? It's the underinvestment that has gone on thanks to, in large part, the IEA. We are talking not millions, not billions, but trillions of dollars that was not invested into conventional energy, into oil and gas over the last 5 years, mainly because sentiment was split on whether or not those investments would pay off. If you needed a 20, 25-year runway to make those investments make sense, well, you didn't know you had it until last week. And the best part is, those investments, even if every single penny was spent today, would not come close to fixing the supply gap that we are going to experience in the next 5 years. When I talk about a significant imbalance in supply and demand, I am not joking. Let me show you a slide from Chevron from just a while ago. Now, this was published before the IEA announcement, but seeing consensus reinforced just shows how crazy this story is. Take a look at the graph circled there. It shows an insane imbalance between demand and existing supply. And that imbalance is showing up not over 20 years, but over 10. That means that in the time it would take for any sort of significant new supply to come online, the demand is going to outstrip existing supply by the tune of millions of barrels a day. That is up to a significant new player, bigger than Canada, more than double the size of what Canada produces, coming online almost immediately in order to ramp to fill that gap. And while some folks might say, well, isn't OPEC going to fill that? Don't we have Saudi Arabia? Don't we have the United Arab Emirates? Aren't these cheaper players going to fill that gap instead of Canada's oil sands? The answer is no, because those guys have wasted their ammunition in 2025 trying to crush shale while it was down. That means that the story is getting more and more bullish. We have systemic imbalance. And the best part is, that's not the only bullish story for Canadian oil and gas stocks. On top of that long-term bullish story for the price of oil, within a context that there is no OPEC spare supply to deal with any kind of supply imbalances or any kind of shocks in the market, there is also an insane bull run. I'm talking generational bull run for natural gas happening right now. While oil might take the next 3-4 years to play out, the natural gas story is happening today. And if you're buying Canadian producers who are exposed to both of these things, well, think about the 1-2 punch that presents for their profitability, for their revenues, and for their value as a company. This graph is shared by one of our favorite analysts, Eric Nuttall, who showed just how crazy the natural gas story is in just the United States. And this is only for data centers. And while you think data centers, a lot of folks have been saying, oh yeah, that's the most bullish thing on the planet for nuclear. And hey man, in 2035, you're probably right. Nuclear will have taken such a big share. It'll be awesome. But what about from now until then? The data centers are being built today. They needed power yesterday, and the only available source seems to be natural gas. We've seen that in the stories from the people making the generators to turn natural gas into electricity. They cannot build the things fast enough. And natural gas is going to take a huge share of that electricity demand. On top of that, look at the scale of the LNG build out of the last couple of years. We are talking a doubling of American capacity at today's investments, today's projects, which are being multiplied seemingly every month. We are seeing potentially another 2 BCF a day of American LNG feed gas demand coming as part of these new projects coming online. Saudi Arabia is getting in the mix, trying to invest in the United States. All of this is creating huge demand. Oh, and Canada, by the way, is also doubling, more than doubling, by the way, our LNG demand. We will see a huge amount going into that. We're even seeing federal dollars flowing into that, the only sort of oil and gas project that they're supporting. So that natural gas story is incredibly bullish in the States, incredibly bullish in Canada. We have some fantastic producers here who are producing some serious volumes of natural gas, which has been an absolute shoot in the foot over the last 6 months, but is going to be a gigantic slingshot to the upside over the next 12. And they're trading at cheap prices. And so all of these stories, we got this long-term bullish oil story where supply is not going to keep up with demand. We've got this crazy natural gas story where natural gas prices are expected to, double or triple here in Canada. The price these guys can get for their natural gas for AECO, which has been historically one of the cheapest, most discounted natural gases on the planet, is suddenly going way higher. The fact these guys can exist and operate as companies today is a miracle. The way they're going to profit in the next couple of years is going to be insane. And the best part is Canadian oil and gas stocks give you access to both of these bull stories, and you're going to be paying barely a double-digit PE. There is nowhere else you're going to find that kind of crazy supply-driven bull run. There's no world where you're going to see the fact that underinvestment in supply has just led to an insane increase in value. And the best answer, the best cure for these kinds of demand imbalances is high oil prices, right? The best cure for high oil prices is the oil price to go higher. And the problem is that because the investments haven't been made and because the United States has already had their shale revolution, where is that short-term oil coming from? Where is that marginal barrel? And if you listen to analysts in the sector, they're saying, we don't know. They don't have an answer. They don't know where they're going to find a supply solution to this. And so you are left with an insane opportunity. Now, if you're looking to buy into this opportunity, there are lots of great options out there. I personally, big percentages of my portfolio exist in things like C&Q, things like Tourmaline, both of which I bought on whatever dip I could find, both of which represent scale players, both the largest oil and the largest natural gas producer. But if you're looking to take advantage and get probably the best upside torque, there's a couple other names that I think deserve some significant attention that I have not been talking about as much as they deserve. And one of the first ones is Cenovus. Now, I know we've talked about these guys a million times for the whole Meg Energy story, and we talked about them earlier this year, and you see that dip on the chart on the screen. Talked about them earlier this year when these guys were trading so cheap it was unreasonable. But the fact remains, these guys are not overvalued, despite the fact their stock price is up a significant margin from the trough of this year. And the fact that these guys now have so much more oil sands asset, the fact that they are one of the most profitable companies in the entire space, and of the majors probably represent the highest upside potential, just offers such a great opportunity. They have got one of the best asset bases out there. Maybe it's not the size of a C&Q, right? Maybe they don't have that scale, but they are still a $34 billion company that could easily be a $100 billion company in the next 5 years. And that's talking a reasonable growth. We're talking maybe a $75 to $80 barrel and a $4 to $5 ACO price. These guys could easily be a $100 billion company. And what if you see some significant value added to the company based on the assets they hold? What if people start representing that asset base as stock price, as market cap? Well, in that case, these guys could be even higher than that. So you're talking about a significant upside over the next 5-10 years. And you are talking about what downside? What is the risk if you hold? Oh, you only get a 3% yield. That's the risk compared to buying one of the larger stocks. You only get 3%, which, if you haven't noticed, is still not bad compared to many stocks. And let's be honest, if you don't see a significant movement in the stock price and you do see the kind of movement we're seeing in natural gas and oil, they will be buying back shares so fast that that yield will be going way up. I'm sure there'll be special dividends. You'll still be valued. The second stock on the list here is another stock that was involved in a merger. And this is one of Eric Nuttall's favorites right now. And well, hey, do not buy things because a short-term market analyst says to buy them. Do not buy something because you hear it on BNN. Doesn't mean this stock isn't a fantastic buy. These guys are not only a significant player in the Canadian oil space, they are not only now quite a large company. Right? We're talking about a $15 billion company. They have significant long reserve lives, but they are also a good mix of oil and gas. And specifically, these guys are a light oil play, which gives them a little bit more torque to that gas story, which means you could see a little bit more front-loaded upside. Now, you might be wondering, okay, if I'm getting this natural gas exposure at a time when natural gas is so clearly going to be more valuable in the future, I'm buying into a company that just went through a merger, so there's a little more institutional attention on it. I must be paying a higher valuation, right? It's only logical that for a company that has all these additional benefits, you'd be higher valuation, right? Well, if you're looking at the forward PE, which not the best metric, but still, you're talking just about 10, under 11. And it yields you almost 7% in dividend. And well, hey, anytime somebody says, look, this dividend is crazy high, we're almost double digits, you should be a little bit skeptical. These guys are a significant opportunity. Even if they cut that dividend down to 5%, you are being paid a significant amount to sit in your hands. And again, the torque to the upside here is huge. Guys like Eric see the next 6 months to 12 months at a 40 to 75% upside, depending on, of course, the commodity prices. But with the exposure to natural gas here, these guys are barely up for the year. They're basically flat from some of the points they've been at over the last 6 months. And the story gets better and better for them basically every day. As you see more investments in AI, more investments in LNG, you see more demand long-term for oil. Thanks to all these major shifts, these guys are going to be a much more valuable company in the future. I'm buying them and I see a significant opportunity in the stock price. Finally, I have an absolute darling of a stock that has been beaten down over short-term foolishness, in my opinion. I think this is maybe the best, most undervalued opportunity in the space. And legendary investor Rick Rule says this thing is the best run company in the Canadian oil and gas space. It's ARC Resources. If you don't know these guys, then you should definitely look into them. Because not only are these guys a natural gas forward company, right? They have a significant exposure to natural gas, but they also have a significant condensates business, which allows them significant exposure to the oil story. Oh, and on top of that, look at the stock chart. Look at the price of this company. We are talking down in 2025, a year when natural gas went from, oh, maybe LNG Canada will save it, to, oh my God, they are investing more money into natural gas demand than we have seen in our lifetimes. A year when the bull story for natural gas is not only confirmed with a significantly higher American price, but also is basically on the lips of every institutional investor across the country. And yet the stock price is down. Do you want to know why? Because they messed up. They made a small error in their engineering on their new project that they invested money into. They showed that maybe this thing isn't going to be as valuable in phase one as they expected. And according to sources, again, like Eric Nuttall, they say they fixed it. And well, of course, the market will not trust them until they prove it. They will not trust them until the next earnings call. As an individual investor, what do I have to lose? Okay, maybe that project is worth 5-10% less than we expected. But is the stock as a whole really going to be down on a year where it had climbed up to $30, over $30 Canadian a share, and you're asking me to pay less than 25? That's crazy. The undervaluation on this is insane. And at a time when, again, there is a decades-long bull run in the Canadian oil and gas space, and these guys are a significant condensate supplier that allow any of that gas to get out of the oil sands. At a time when there are almost trillions going into natural gas demand, you're going to tell me that this stock is worth less than it could have been a year ago when neither of those things are true. I'm not buying it. And I am buying ARC Resources. I think there's a significant opportunity here. This is actually one of my highest conviction buys right now. Well, again, I've bought a significant amount of C&Q and Tourmaline, the biggest players over the years. I think it's when you drop that little bit down in market cap right now, where you see opportunities like this that make no sense. And they don't make sense because still, there's so much challenge in the sentiment that big institutions are not paying attention. They're letting stocks like this slip through their fingers. And you're not going to find that in most sectors. If you go to tech right now, you're not going to find stocks that are significantly undervalued slipping through the fingers of big firms. If you go to even mining, think about the gold miners. You think you're going to find a significantly valued gold miner that is looking for a significant growth in their market, a significant growth in their commodity, and all of a sudden the price is way lower than it should be? No, that's not what those industries look like, because inefficient markets shouldn't happen. But investors have ignored this sector so much that it's happening here. And there are opportunities that you're not going to find anywhere else. So I've been deploying a significant amount of capital. I think this is one of the best opportunities, and I don't think it'll last forever, because every day that things like the new IEA report are out there, more investors are turning to this market. Every month, we see billions of dollars of US money flowing into these stocks, either through things like the Aventiv NuVista acquisition, or in things like significant asset managers starting to buy in because they see that there's an opportunity. And as a Canadian investor who invests in Canadian stocks, who's been focused and screaming about this opportunity, I'm going to make sure I get my cut too. So I think this sector is looking at a significant bull run. I think the story is not only alive. We've not only seen some significant outperformance compared to the commodity over the last year, but I think the opportunity in the next 5 to 10 years is world class right now. And I think as an investor, I do not want to miss out. Let me know what your thoughts are in the comments down below. Are you also a bull on the Canadian oil and gas sector? And if so, why? Do you believe that these stocks, like the ones I've mentioned, or others in the sector, are going to have these kind of bull runs? Or do you think maybe we're still getting a little over our skis here? And of course, as always, if you like this video, please like it. If you like what we talk about here on the channel, you like covering these Canadian topics that aren't getting the kind of news attention they maybe should, please do subscribe. And I hope I see you in the next video.